Hey guys, how's it going? Hope you're all having a fantastic week so far. So yeah, let's dive into Eurodollar. Super quick recap of the overall high timeframes. Weekly is still bullish, right? Expecting any point we could have a weekly high low. However, the current low that we are pausing around, this low here, should in theory be a weak low because it failed to take out its high, so I am expecting it to get run. And today we just about ran that, well, I think it was yesterday actually, ran that by a few pips, so it is starting to break down. Technically that low has been run, but I probably would expect price to push a fair bit deeper down than what we had so far, because we'll check in a minute, but I don't believe we've had a 4 hour or daily close below that level yet, so I do think that's what we'll get. So we'll either see price continue to trickle down and then we'll get a deeper move, and then potentially that bullish move there, or potentially we'll get a little bit of a reaction and we'll just blow straight through these lows, and potentially we are going to switch bearish. But for now, more sort of immediate bias is to see a bit more of a deeper run of this low, and then we'll reassess to see whether we get a sweep or if the bearish order flow is going to stay intact. Pretty similar on daily chart, and this is what I was saying last week. We became suspiciously close to that low. We didn't even, I think we were 5 pips or so short. All right, nice bullish reaction there. Daily double bottom, just absolute textbook example of expecting those equal lows to get run, right, which is what we're starting to see today. Yeah, so we had a bit of a pullback. I mean, we pretty much hit the EQ, not perfectly, but market's not perfect. It doesn't have to hit the EQ, right, for us to look for shorts. I mean, it doesn't even have to come anywhere near the EQ for us to look for shorts. It's just high probability if they do. So yeah, we had that pop up, I believe, on Friday, and then pretty much since the market opened intraday, we've just been seeing continuous bearish order flow, which is really clear on the M15, which we'll take a look in a bit. And none of those minor highs that formed were breached. We've stayed bearish pretty much the entire time until we got a sweep of this low. So yeah, that's pretty much all there is to add in terms of the daily chart so far this week. 4-hour daily, we haven't had a close below that low yet, but I will be expecting price to push deeper, and that remains to be seen then whether we'll get that nice sweep and higher prices, or if we're just going to stay bearish then at the point and then look to target the overall weekly low. Now, do want to kind of make some points on how I was labeling the 4-hour structure, as I am kind of starting to change my approach a little bit. I guess I kind of need to do a little bit more testing, have a bit more just spend a day really going back through the charts on Eurodollar, and just have a real look at I need to kind of make my mind up a bit more on how I want to define structure. Before I've been quite aggressive, so let me actually go into the 4-hour chart and show you what I mean. So essentially this was the daily range we were playing within, right? This leg down here, looking for the daily pullback to form that lower high, which is now what we have got. But on the 4-hour chart, right, if you kind of really look at it and you just go, well, where are the swing points? Well, really it's kind of like, that's the swing, that's the movement down, that's the 4-hour swing lower high, right? And we're looking for that next lower low. But because if I had taken those swing points as that as my 4-hour swing high and that as my 4-hour swing low, then it's the same as the daily. So that's why I was kind of just happy to view this minor pullback here as my 4-hour swing structure. Then when we got that break to the upside, happy to view the 4 hour as bearish, but I'm very aware of that. It's just a bullish pullback. Well, it's just the 4-hour switching bullish in order to facilitate that daily pullback, but the daily staying bearish. So I know that this is not going to be a long-term 4-hour bearish trend. I'm looking for this to change trend at any point, but kind of thinking, it doesn't really make too much sense to do that. Really this is the swing high and this is the swing low. This is a very minor pullback. So I'm potentially going to start looking now to be a lot more conservative with my management. So in that case, this is just really 15-minute swing structure, and the 4 hours bearish at that point. That is just a minor break of structure to the upside at that point there. So yeah, the 4 hour just missed the EQ. It didn't really come up to that buy to sell wicks that we were looking at, and on the market open we just started to sell off, and yeah, none of these sort of demand zones really held. We got a bit of a reaction at those sell to buy wicks there, right, a bit of an intraday play, but then we continue to come down. Then looking at this sort of flip zone down here, very minor reaction. There was a trade in there which we'll take a look at as well, which obviously ended up being a loser, and then we smashed straight down through this zone as well, spiked down, and we got a bit of sweep of that low there. But as I was saying, we haven't had a 4 hour or a daily close, so although we've had a sweep, that does give you bullish opportunities to look to play this to the upside, right? But you have to bear in mind that generally, because it's a crap sweep and because we haven't had an hourly close below that low, Very often or not, that kind of bullish reaction will be a weak one. So if you do take any longs, kind of bear that in mind. But then you can also use that to your sort of knowledge that if you do want to get in shorts kind of at those discount prices where it's not necessarily super high probability to be looking for shorts, you can take that with the knowledge that it's been a very minimal sweep, and we can look to really push that down lower and take out those lows there, if that makes sense. So let's take a look at kind of the intraday price action that we've had all week. So we initially had that 4 hour kind of massive impulse up last week, but it was quite kind of one big vertical push up, straight push. So it's not, it's not great in terms of, it being a strong low. Generally, you want to see a bit more of a reaction in there. Otherwise, you kind of, when we get those straight pushes up, generally those those demand zones will end up getting smashed, right? So we had quite a few places that we were looking at, which we'll get to in a minute, but let's take it kind of day by day. So on Friday, right, we had that bullish move, and then up here we took the high and then we took the minor low. So we had that change of character, we had that minor breaker structure to the downside, and then ever since, if you just map this out, right, although this is the 15-minute high and then this would be the 15-minute swing low down here, right, if you mark this out, what do we have? We have a minor low, right, price pulls back up, breaks that low, price pulls back up, breaks that low, pulls back up, breaks the low, pulls back up, breaks the low, pulls back up, breaks the low, right? So this is that kind of minor low and that minor high. It uses this low as liquidity, it comes all the way back up, doesn't breach that swing high there, and then we come lower back down here, okay? And then we take out this low here, and then we push back up, but we never take out this high here, and this is the low that we're in, and then we continue that bearish order flow, right? So the whole time, especially when the premium of a massive M15 range here, sells can be high enough probability to kind of run them and push them down short. Now, especially as well when pair that, if you kind of adjust your view on the 4 hour chart that we have remained bearish the whole time, that's obviously going to increase the probability of taking these shorts even more, because in the 4 hour is still bearish, the daily is still bearish. We've pretty much come up to the EQ of the range. Now the M15 is still bullish, but look how much space we have to work with until we come down and towards those lows. And the bearish order flow from the start of the week literally is never broken. It stays intact the entire time. So if we look at these demand zones here, so the first one we had, right, was this inside bar here, and it's obviously really, really high up at premium prices. So this is not the type of area that I necessarily want to be looking for longs, but it's more just to use to see if we're going to get a flip here, so then we can use the supply zones to our advantage to then look for those shorts, right? So if we view this first demand zone here, what happens? Price comes into it around the start of London session on Monday. We get that bullish reaction here, right? So that's the reaction. Price then comes down and fails to take out that low. So then I haven't got it actually marked at the moment, but that would have been the first area in here to then look for that sells from this area, right? And then we get another break of the low. It's not really a flip, but it's just a standard break of structure entry back into the supply zone, and then you can continue to look for those shorts. And then there was a nice long to look from this area here. Now we spoke about this a bit on Monday. It wasn't the best M15 zone. It wasn't the most, well, it wasn't that well priced. It was kind of near the EQ here, but it was a very, very clean push, right? The only kind of extra confluence it had was that it had the 4 hour zone there. So it's just the sell to buy wicks on the 4 hour chart. So it's not like a strong big 4 hour zone like that. Really, it's just a 15-minute zone that we can fractally see on the 4 hour. But for me, if I can see that on the 4 hour, that kind of, it gives the 15-minute zone a little bit more confluence. But even then, it's not one that I'd be, whacking a risk entry or a limit in the middle of that zone. I'll be waiting to look for that bullish trend change, that bullish order flow to kick in on the M1. So those zones I've just described in the M15, we're going to look at the M1 entries. So the first one being where we came into the inside bar, we reacted, we failed to take out supply, we failed to make that minor high, and we came down again. So then when price came back in around sort of, 8:15 London time, right? That's the first sell. Then the second sell when we got that second break of structure, and then we're going to look at the long down here, okay? So let's go into the M1 price action. So this is that first one. I haven't got the M15 marked on, but essentially this is the M15 supply range here, right? So just wait for the M1 to see if it's going to switch bearish and see if this is going to hold, right? And that minor high is not going to get breached. So what do we have? Well, we have that's the minor pullback, and then all of those candles there all break the candles high. So this is then our M1 low. So that's where we would need to see the change of character. But what do we have? We have a sell to buy candle there. So for me, it's not the best in the world, but that would count enough as M1 demand. It obviously would be a lot clearer on the 15 second. So price comes into it. But then this is kind of what validates this candle as demand even more for me, is you do see a pretty decent reaction, right, for the M1, right? It tries to make a higher high, but it doesn't. We then close below that reaction, but at the same time, we also get the change of character. So that for me makes it, purely in terms of the M1 price action here, it makes it an A plus setup. So not necessarily an A plus setup in terms of where we are in higher time frames, yada yada yada, but purely talking about how the flip set up, that's pretty much what I want to see, right? I want to see the demand fail, the supply take over, and we get the change of character, and then obviously sell anywhere within that range. You could have refined it to the inside bar, and that would have given you a really nice refined entry. But just putting your stop just above, seeing how far down 2 pips gives you, right? And then that would essentially be kind of your mechanical way of then getting in. And then, yeah, you can either target the low, which is below the low for around 5R, or see if you can push it down to that next M15 demand zone, considering this demand zone is still in the premium, right? And there's still plenty of way to go. There was a flip down here, but it doesn't really come off anywhere, so it wasn't the best. But, if you want to take an aggressive hedge, if you're in a short, right, you just follow the bearish order flow. And as soon as you see some bearish order flow, after we've had that minor 15-minute break of structure, maybe that's enough in your trade plan, right, to want to take this. So what do we have? We have supply. Price comes up into the supply. It reacts. It just closes above here, right? This candle at 901, right? This candle here. And then you can either enter at market straight away or wait for a little pullback, smash buy, and then you're in a decent hedge. But then what did we have? We had that 15-minute minor break of structure. We created that another zone. We have the M1 refined zone within. But even if you don't look for the refined zone, again, you can just be aggressive, wait for the M1 order flow to switch bearish. So it's bullish, bullish, bullish. And then this one's not super obvious, but because if we look in, right, what do we have? This pullback here would be really clear in the 15 seconds, right, where we get that pullback. We get the push up, and then so that inside bar creates demand. Right, so price comes into it. It reacts. It's a bit messy, right? I'll give you that. And then it closes down here. So when you get this candle closure down here, you can then look at the supply zone. You'd have to be a bit quick the next minute it comes in and goes. So it's not the cleanest in the world, probably a bit cleaner on the seconds time frame. But when you kind of see, at least, that's that bearish order flow starting to kick in, or you see the demand zone start to fail, just when it's mitigated an area right near the top that you like, that's when you can have that confidence and be a little bit more aggressive with your entry. So that was the two short trades from around these areas here, and then we came down into that 4-hour wick fractal zone, whatever you want to call it, and that 15-minute demand zone there. So don't just want to necessarily whack a limit on there. It's not the best area really to be trading. It's now against, right, the 4-hour trend, if you define it that way. It's only really pro 15-minute trend. Everything else is bearish, and we're trying to buy in the premium prices still from not the cleanest looking demand zone. So what do we have? We have a really clean M1 flip here. Price calls up into supply. It tries to form a lower low. We take out the supply, we close above, and we get the change of character, right? So technically you could get anywhere in this sell to buy range. You could buy, or you can refine it to this bullish candle, right? Or when you have a big wick, you can refine it to the wick. Another kind of little quick tip, I can't remember if I mentioned this before, but I spoke about this, I think, briefly on Monday, on the call on Monday, but if you're being very, very super strict, kind of old school in the way that you define your supply and demand zones, technically for a demand zone, you should be drawing your zone on the bearish candle, right? That is then engulfed by the bullish candle. But in this case, the bearish candle is not engulfed, right, by the bullish candle, and I'm drawing the demand zone instead from the bullish candle that's engulfed by a bullish candle, right? Which doesn't make sense. It shouldn't be two bullish candles. It should be a bearish candle and then engulfed by the bullish candle. So by me drawing the demand zone on the wick, that's basically me saying, pretty much 9.9 times out of 10, there is going to be a valid, demand zone there on the lower time frame. So if we take a look, there should be a bearish candle within there. Yep. So that would be, this is what I mean, right? That's if you want to be super, super strict, that is what a demand zone should be. It should be the sell before the buy. Okay. So that's generally kind of what you're getting away with when you don't want to, jump through every single time frame to be that strict. You can. But I'm happy to kind of just stay in one if I can and just refine it that way. But obviously it applies to all time frames as well. If you've got a massive 4-hour candle and you just want to refine it, lost now, to the 4-hour wick, then essentially you're probably getting a 1-hour demand zone, right, just by doing that. So yeah, there's a pretty clean flip there. Just hedge back up towards that next M15 supply zone there, right? So it ends up just sweeping that high as liquidity. And then there was an aggressive hedge again, right? So if you saw that sweep of the high, we didn't quite, I kind of refined jumping around a bit here, but you see how that's the bullish candle? It wasn't engulfed, so then technically you should bring it to the next candle there. So then it does reach it, very, very clean flip here, right? Comes down into demand, bullish reaction, break down, closure back in. There's a quick hedge there if you wanted to take that. Then we get a better position trade because we come right up into, you know, that lower high, which needs to hold. If that internal substructure, you know, internal bearish order flow needs to hold, it can't take out this high, right? So what do we have? Wait for the M1 to switch bearish. Pretty clean flip here. Depends on kind of whether you took the whole range or the refined M1 candle, because you do get kind of two entries there. So if you take the whole range, price comes into it, it reacts, it fails to put in a higher high, right? And then when it closes here, that kind of closure below the low, below the reaction, then you can get anywhere within, you know, this whole buy to sell range. But if you look on the 15 seconds, you get a very nice refined entry where it's a lot cleaner. So let's take a quick look how that looks, right? So you have the pull back into the demand zone, the reaction, the push down. This is clearly where the supply that came in to do that for you, right? So let's get out of there and then scroll back again. Yeah, this one here we were looking at. And then if you would just had it refined to this candle, right, if you don't want to take range demand and you do it the single candle, then you'd have to wait for this low to go. Price does come back up to mitigate it, but I think you would have needed a 3 pip stop, so one to have been tagged in that trade. So if you had taken the EQ or, you know, anywhere higher from the distal, you wouldn't have got tagged in, because really you want to cover this high, right, if you're taking that whole buy to sell supply. So you'd need a minimum of 3 pip stops there. So yeah, probably wouldn't be get tagged in if you do go for that refinement. And then we kind of ranged around here because it's sort of end of session then. So we come into the next day into London and we take out that 15-minute minor low. So we're continuing, right, that internal bearish order flow, that minor breaks the structure to the downside. And the next zone I was looking at was this wick here, because it's not very, very clear, this whole section of price action. And this is kind of all these trades that I'm going over these days. There's nothing super high probability here, really. But yeah, obviously the opportunities are there if you want to take these sort of more aggressive, not so well priced entries. So the zone that we looked at this long from here was this clear sort of sell to buy demand zone. And then we had what I viewed as this wick here, because essentially you had the inside bar, I just circle this, which is where the flip occurred. So we had this, when I scroll out, we had this M15 supply zone over here. Price comes into it, it reacts, right? So then the reaction fails, which is this demand, and then the next candle, price comes into it and mitigates it and goes. So that's pretty much gone. And then we get continued order flow, right? We have that as demand, and this candle comes into it, and it goes off. And then we have that created as demand, and then candle comes into it and goes. But, you know, there was still potentially some orders left in that wick, and that's kind of why I refined it to that wick. But yeah, it ended up coming a little bit lower, I think, eventually into this wick here. Yeah, if we take a look, it did spike a little bit lower. But as long as you're looking in the general area, you can, you know, look to see what price action sets up on the M1. So let's take a look. So for me, it comes into that zone, which I liked, but I don't think there's really a clear M1 flip here. So you've got nice sweep of liquidity. You know, if you took that whole area as supply, right, with the black lines drawn in, price does come into it and it does react, but then it does take out this low. So, you know, this is something I don't think I quite have an answer to yet in my own trading. So interested to see what you guys have found or what you guys think, where essentially if we view this whole range here, right, as our supply zone, right, if we don't refine it, right, so it's that supply zone there, price comes into it and it reacts and it spikes the low, but it doesn't close below the low. So technically that's not a break of structure, but it, you know, it did continue that movement down. So I think there's another example as well that happened later on this day on Tuesday where this happened again and then it ended up being a failure. So I think kind of based on that, you know, if the way this should be a valid trade is price should come up, it should try to go down, it should never breach the low, and then it should cause a reaction to fail, and then you look to buy in here and go. But in this case, we got the reaction and it did manage to spike lower. So for me, that's not a valid flip, okay? And then we come lower again. All right, so you can have this whole range, so we come lower. We come in, we don't go any lower because that's an inside bar, and then we close up above it. Actually, so yeah, that would be, it's a bit harder to see that one, but that would be your reaction point, right? So if you're taking the whole range, so this is all of this is your supply. We come down, we come into it. Then inside bar means that low never got taken, and then we break up above it. So yeah, that technically here would be a long entry, and that would have ended up being a loss. So that for me would be valid. It would be a lot clearer on the seconds time frame. I should say 2 pip stop, right? Well, huge stop there. Well, I should be entering higher anyway, above that reaction. So yeah, about 2 pip stop. Yeah, it definitely would have been a loss there. And then we get another sweep, and then we see that real big, nice bullish move. But I don't really like how clean that push is, so I wouldn't have been super confident of setting, whacking on a limit there, but definitely does work out. Now, I checked the 15 seconds here, and there wasn't really a clear entry there for me. There was one, but it wasn't the best. There wasn't much of an exchange. There wasn't much of a reaction. It was kind of more of a straight up push through. So this one here was a valid M1 entry, right? We get the push into supply, the reaction, the up and down. But do I really want to be buying at that point in the leg? It's very, very aggressive. So unless I loved this level down here, then maybe I'd consider being aggressive. But for me, not so great. Now, the other thing as well here is we did have, minor M15 decisional supply here. But the reason why I wouldn't have actually been that concerned about trading through that, if I really liked this level down here and I did want to get in, is because we had already mitigated it here. All right, see, this is very, very, paying attention to the details here. So what happened? We had this M15 supply zone being created when we broke that low, right? It's a minor supply zone. And then this candle here at 8 o'clock came into it, right? And then it came down, right? And this is then when price came back up and the entry is here, right? Or the entry we'd be looking at. Now, as price goes up and creates that flip demand zone, and we're up here at this point now, it hasn't come back down to trigger you in, right? What has happened? We have closed back above the M15 reaction point, right, from that M15 zone. So what that should mean is that this M15 zone is now going to fail because demand's in control, because the reaction to that M15 supply zone, right, just failed here. So maybe then when you see that, that can give you confidence to now whack the limit on here and get in, right? Takes a little bit of a while to go, but then eventually it does go off. So yeah, hopefully that makes sense. And then we came up a little bit higher. We didn't quite reach that extreme demand zone, right? Nice sweep of liquidity, and we dropped off. But what we ended up actually reacting to, right, this spike here, and what that spike was the demand flip, right? Well, the demand to supply flip, because that was our demand, right? That broke this high here. Whoops. Price came down into it. It reacted, that's the bullish reaction, and then that's where the supply came in to cancel that reaction and take out demand. So that's why price then mitigates that and then drops off a cliff. So if you were looking at this zone above, but then you see price starting to move down to the downside, and this is kind of where you can be. There was actually an M5 inside bar zone here as well that can kind of help you spot it a little bit. And you can look for the entry down here. I don't actually think it kind of gave one, because if you took the whole range, there was a reaction there and the breakdown, but it never came back up to this area of supply. If you take the refined candle, we have the reaction. But if you if you wait for a candle closure, it's not until here, and price never comes back up to this supply zone, right? It never comes back up. Yeah, it never comes back up. So the only way you could have really got into that one, if I can get rid of these lines, Control Z undo, there we go, was with the decisional, right? That last point that went there. But I definitely would have been looking at this area here, because for me, that's where the reaction failed. And then it's kind of around the London low, which is a time I definitely don't like looking to trade. But at this point, you may have then been looking at, because we did have a change of character to the upside, right? So you may have been looking at M15 demand down here, but you have to be aware that this is still our minor high, and this is still our minor low, right? When you're looking at the minor breaks of structure. So because this wasn't the not the swing high, but not the minor high of the range, right? This was just liquidity, essentially taking out the liquidity to come up, right? So you may be looking for longs, but yeah, ideally you don't want to be trading kind of during that London low, clearly just building liquidity there. We then do get that sweep, but we come down, we do form a lower low. So for me, that isn't a flip. Well, actually, no, it is, excuse me, because we have this whole little range of supply. Price comes back into it, it moves down, and it goes up. So yeah, that would actually be demand here. Now, of course, it's valid to whack a limit on there. And if you did, you would have taken a loss there. If you waited for the reaction from here, then yeah, you wouldn't have got in, because it just does its madness. It looks like there was probably news at half one there, I'm guessing. So I think there was sales news maybe. Can't remember quite. But yeah, hopefully there was news, you would have avoided that loss. And then we came down into, right, we get another minor break of structure now, continuing that bearish order flow. We have this M15 range. We do get a reaction, but there's no entry there, at least maybe on the seconds, but not on the M1. And then we come down lower, and now we're coming into this, what looks to be a pretty clean 4-hour zone. I did like it because it was what caused the 4-hour supply here to flip and fail, right? And we had the M15 right at the extreme. Now this is where it's kind of similar to that trade that we just spoke about, where I was saying about, it depends on how you define price coming down as spiking the low, whether you count that as, a legit break or not. So what do I mean by that? So we come down, we create this supply zone here, right? So price comes into it, move this other way, right? And it reacts, but it does take out this low, it does spike it. So maybe that means that supply here, this supply did do its job. So that means that, so I'm just thinking through. So that means that if supply did its job and price did manage to take out the low, right? Then that means that this demand did not hold, right? Which means this supply zone here, right, took out this demand zone. But because this demand zone, right, so I'm just thinking this through. This is why I have to build the story sometimes when it's a bit more complex. But if I can kind of simplify it, if you're looking at this demand zone here, right, price managed to spike down through, so that means supply took out the demand zone, right? But we only care about strong zones. And is this demand zone here strong? No, because it didn't achieve anything. It didn't even cause a change of character, and it didn't take out supply. So this demand zone is very, very weak. It's a weak low. We expect it to get smashed. So when this supply comes into the market and spikes through that low, well, yeah, that's what we expect. So this supply isn't anything special because it took out a shitty demand zone, right? So then when price comes into this supply zone here, right, and it reacts and fails, technically that is a flip, but it's a flip on a really, really weak supply zone, which means that this demand zone is weak because it doesn't take a lot of money to take out a weak zone that took out a weak zone that did nothing, right? If that makes sense. So yes, technically it's a valid flip, but that's kind of potentially why this flip didn't work out. Also, you have to bear in mind, if we actually look at where we are in structure and everything that's going on, especially if you're viewing the 4 hour as that was the bearish pullback, it's come up to the EQ. Now look at the amount of momentum that's coming down from news. You probably at least want to wait for an M15 change of character in that case. Okay, so it's a valid trade, I guess, but they're kind of my reasons when I've dug into that of why that trade didn't work out too well. Then we get the M15 break of structure here to the downside, and we have that swing structure. So now for me, that's the swing high, and then we move down into the swing low. So being a little bit more conservative with my swing points. Now, I'm not really classifying this as a major swing. It's all in context, right? We've got that big swing down, right? That for me, hang on, let me see here. So yeah, because we haven't had that 4 hour break of structure until here at 2 o'clock today. So if you're coming into Wednesday, we do get that bullish change of character during the Asian session, and then you could have been looking for longs. But this is when it comes into what I was saying of a very, very poor liquidity sweep here, like barely any, a few pips here. It's unlikely that we're going to get a big pullback at that point. Whereas if we get a true break of structure, which it looks like maybe not getting now, then you can expect, potentially that actual pullback on that time frame to kick in. But at this point, it's just a little bit of a liquidity spike to have a little bit of a pullback. And this is why you can be more aggressive with your long entries in terms of management. And also you can still potentially look for shorts if it meets your plan, selling quite low. So none of this is high probability. You're more than welcome to literally not even look at Eurodollar when it's doing this. But if you do kind of, it's still tradable, but I just kind of wanted to make out that point that it's not super high probability. So at that point, I kind of marked out all the obvious supply zones. This one was not so obvious, which we reacted to, but what it essentially was a 10-minute inside bar that took out the decisional there. So yeah, you would have had to been pretty, paying attention there to kind of have spotted that supply zone if you weren't dropping through all of the time frames. But yeah, we did get a very, very nice flip from there. I think later on in London, today. So we came up into that zone. All right, we have the reaction from demand. And then we come down, we range, we break that low, we come back into it, and we go. It was actually very, very clean on the 15 second because let's take a look at it. What do we have? We have the series of mitigations, right? We have some nice bearish order flow. Price comes in, it reacts, it comes into supply, the M1 supply, right? It holds, it shows the highs are holding, it comes down, it tries to react off demand, but then it causes a reaction to fail, right? We get a sweep of liquidity there, right? Spikes those highs. Nice zone there. That's what we want to see back in. And then we were off. I believe there was another few entries you could have taken as well if you wanted to kind of just follow that sort of bearish order flow. Let's have a look. So yeah, like if you were looking for this one, we get the reaction, the fail, the push back in. Then we go back into the next supply zone as well. If you wanted to chase it. But yeah, it's not the best area to be trading in the world. And then we come down into, so we have this M15 demand zone here, right? Very, very poor one, but one that you may want to look for a hedge, an aggressive hedge, where where are we? That's why I was getting confused. Here, right, where we come down into the supply zone here. So this is the demand zone that we're now looking at. Again, these are not great trades at all in terms of the hard time frame story, but just kind of, it's still, useful to study price action to see where we can apply it to other areas. So what do we get? We get the liquidity sweep, we get the pullback up into that range supply, we get the reaction, and then here at 10.12, we get the closure above, come back into our demand zone, and then we're off for a quick trade. But with a 1.5 pip stop, it doesn't reach 5R. But yeah, if you 4R, take 20% off, then you would be break even, or just move your stop loss to break even when it's a very, very aggressive stage at this point. But if you're in a short, you may want to leave it open, and then that way it doesn't matter too much because you're going to be making profit. If we continue to go down, and then we came down into that extreme demand zone down here, right, or the inside bar, depending on how you've drawn it. Both are kind of valid in my opinion. We get a nice sweep of liquidity into it, aggressive in, aggressive out, which is exactly what I want to see. It shows big money stepping in. But even if you took the whole range kind of thing, right, that's still not the reaction to up here. So then we get the break of the reaction there, and then you would have had to enter on this zone, but it's a very large zone, so I would have been having my entry down here. I never would have been tagged in, and then we rock it all the way up. But then what do? We come up to the next ping pong zone at this point, right? Because this is the one minor leg down, right? That's all part of one leg down, and then we come back up. Now we don't quite hit the inside bar, miss it by a pip or two, and this is where you can kind of read between the lines a little bit. And what do we have? So we have bullish order flow staying intact the whole time, right? Price goes up, it comes into that demand, tries to make a higher high, pushes down, we get the change of character, we get the failed reaction, price pushes back into there, and that is a super, super clean flip there, targeting the M15 low for just over 9R. And that one is still running by the looks of it. Zoom out and take a quick look. So yeah, that's kind of started to spike down now. So yeah, we're kind of in a very, very messy level in terms of looking for entries. We're waiting to see how the 4 hour, if we can get a closure below or not, to then mark out this as our new 4 hour range, right? But yeah, I think at the moment, until price starts to sort itself out, or how I'd be looking at this, right? Let's imagine we get the 4 hour closure below. This will be our new 4 hour range. Just be looking for the sweeps, then play the aggressive counter trend longs back up into the EQ, and then be looking for those shorts in the premium, and then continuing to look for those pro trend bearish moves until the 4 hour truly switches bullish, right? We get that true swing change, and ideally the daily as well. Otherwise, the pro trend trades, you're just going to want to be patient, wait for price to pull back onto those premiums, or if you're happy to be a bit more aggressive, just wait for those sweeps, wait for those chocks on the 4 hour chart and trade them back into the premium. And obviously use your 15-minute time frames as well. And yeah, that's kind of as far as it can really go with the forecast at the moment. We are sitting within this large daily zone, probably expecting a bit more of a sweep of this low. So it'll be interesting to see if there's any sort of big demand left in this demand zone, to see if we can then start taking out these daily highs and potentially go higher, and see if this weekly high is going to hold. Otherwise, yeah, it may be time to get that longer term switch in trend. So that will remain to be seen. But yeah, hope you guys have a good rest of the week. I hope my pup was not barking too loud through all of that. I do apologise. But yeah, I will see you guys next one on the weekend. Cheers, guys.